What is up, guys? My name is Aaron Letty. I welcome you guys into either viewing or tuning in today live into what I'm going to call a super special edition of our YouTube channel. So today we're going to bring in a special guest. We've been getting a lot of questions, here recently with the market shift around a lot of money and around a lot of loans. So we thought, what's a better time than to bring in our special guest, Mr. Ryan with loansforinvestors.com, to kind of come in, open it up to do a Q&A. So today I'm going to challenge you guys, bring any questions that you guys possibly can. Just drop them in the chat. We'll bring them up on the screen live, and we'll go through them, in real time. So without further ado, Ryan, you with us?
Yep. Thanks, Aaron.
What's going on, man? How are you?
Good. How are you?
I'm doing good, man. It's another beautiful day in Ohio.
Oh, yeah.
Cool, man. So I know that you have I know me and you kind of talked briefly earlier today. So I think you have a kind of a PowerPoint to kind of go through, real life example of, an overview of your guys' products. And really the kind of the way I want to view this today is, treat me as if, I don't know anything. I'm a complete newbie. Let's say that I'm either a newbie investor or, I'm an experienced investor, because I know that you guys have products that can fit the needs of both categories. So if you want to take us through, the products which you guys have, we'll kind of answer any questions live, kind of going through it.
Sounds good. Yep. Let me pull it up here.
Ryan, how long you been with Loans for Investors?
So I've been here about a year now.
Nice.
We lend in 45 states. So we do short-term financing, long-term financing.
Do you have a background fully in lending?
Yes, I do.
Nice.
So I originally came from conventional lending and made my way over to hard money now.
Which one do you like more? Are you allowed to say one way or the other?
Definitely hard money.
Okay.
Yeah.
Good answer. It's like coming from residential real estate to investment real estate, right? Investment's a lot more fun.
Correct. Sorry, just give me one more second here. Should be loading up here soon.
Perfect. We'll go ahead and share it on the screen right whenever we see it. Yep, there it is.
Perfect. So here's our two loan products. So we have value add financing. These are going to be a 12-month interest-only loan term. We can go up to 90% loan to cost and then 70% loan to after repair value. These don't require any hard pulls, just a soft pull. It's going to be 660 is our credit minimum for our short-term loans. We can close those in as little as 1 to 2 weeks. And for long-term, these are going to be 30-year loans for cash flowing properties, stabilized properties with tenants in them. We can go up to 80% LTV or 75 for a cash out. These are going to be about 3 to 4 weeks for closing. And these do require a hard pull. Minimum is going to be 680 on there.
Okay, perfect.
Yep. A little bit more about our 30-year product. So up to 8 units, standard 3-year step down. So that means the first year, if you pay more than what you're scheduled to, it's going to be 3 points. The next year, it's going to be 2 points. The year after that, it's going to be 1 point. Then after 3 years, the prepayment penalty drops off. You can pay it off without any penalty. Our minimum DSCR on the loans is going to be 1.05. And then we lend only to entities. And we do allow non-recourse and foreign nationals. If loans outside the parameters I just set out we can get an exception, but it's just not guaranteed. So definitely bring over any loans that you want me to look at, and I can give you an answer.
Perfect. I had a question earlier on the DSCR loans. Do you have like a slide that kind of goes deep into that? Somebody, literally one of my students in our community, just brought up, hey, who does these loans? They're looking for one right now. So I thought, what a better time than, I literally said, hey, I'm going live with them in 12 minutes. You want to hop on? So I don't know if she's actually going to hop on or what, but I thought, what a better time, right?
So all of our 30-year loans are DSCR loans. These are all going to be based off the cash flow of the property, and it goes off your monthly payment, and then how much the loan payment, monthly cash flow of the property, and then how much the loan payment actually is. So you have to get at least 1.05 of that property has to be cash flowing more than the loan payment. And then these are going to be, they don't show up on your credit report because we're lending to an entity. The hard pull will, just because every hard pull does show up on the credit report.
Right.
No loan minimum, like maximum amount of loans we can have with you. So you can do 20 loans with us. And then, yeah, these close in 3 to 4 weeks. I don't really have a slide that dives deep into how that's calculated and how those are worked up, but I can go over that more if people have questions.
Okay. Yeah. I'll try to get some Q&A there. And one thing for people that are just now joining, I want to make sure that you guys are posting any questions that you have, maybe a specific scenario that you're running across. Let's go through all these things live. So I'm gonna encourage you guys to just drop any comments that you guys have, in the chat box, and we'll pull them up and just go through them.
Yep. So moving on to our value add loan, it's going to be up to 8 units again. So up to actually 90% LTC. Mainly we focus on 85, but if you've done, 10 plus projects in the last 3 years, 90% is definitely something we're open to looking at in core markets. So those are like big cities like Columbus, Cleveland, Cincinnati, Charlotte, cities like that. We typically stay at 85% for the secondary markets. So that's going to be like New Albany, Youngstown, markets like that.
Okay. So nobody should be scared to apply for something if it's at that 90% in a core area.
Correct.
Right?
Yep.
Okay.
Yep. So these loans are going to be 100% renovation as holdback. So we either lend 0% of the renovation budget or 100%. We can't do partial financing of that renovation. It's through draws. So what you would do is email our draws team, send out an itemized list of work and materials completed, and then we'll send you the money 2 to 4 business days after that. When we'll do a virtual walkthrough after, and then send out money 2 to 4 business days. Then these rates are going to range from 10 to 13%. Points are going to be 1.5 to 2 points. That all depends on your experience in the property type. These don't have any prepayment penalties, so it's a standard 12-month term. You can get it done in 6 months, pay it off with no penalty. And then for your first deal, we ask that you give us at least 2 weeks to close it, just because we have to underwrite your entity. After that, 4 to 7 business days will work for closing. So
brand new newbie investor, got to give a little bit more time, but as time progresses and you do more deals, you kind of have an understanding of the underwriting process, and you can make it close a lot quicker.
Correct. Yeah. For your second deal, we can close in 4 to 7 days, Perfect. Business days.
Yep. What if I threw a scenario at you that I have 2 properties closing practically at the same time? What if it's like they're days apart? Would that have a huge factor in it, or would that be able to ever be expedited? Or
we could definitely get those done.
Okay, cool.
Say you have one closing in 5 business days. That's usually our minimum, is 5 business days for new investors. We ask that you just give us that, because we do have to order BPOs on all of our properties, and those do take time.
Okay.
So this is just a scenario I ran through. So you're purchasing a house for 150,000, putting 30,000 in, your all-in cost 180, ARV is going to be 250. This is going to be a value add loan. So for a new investor, your total loan amount is going to be 144,000. That's right at 80% LTC. And then your down payment is going to be 36,000. That's going to be a 12% interest rate with 2 points and then a $995 origination fee. So going down to the experienced investor, this is going to be someone who's completed 10 plus projects in the last 3 years. We count a completed project as a sale or refinance out of your initial loan to buy the property. So that's going to be total loan amount of 153,000. That's at 90% LTC. Down payment is going to be 27,000, 10.5% interest rate, 1.5 points, then $995 fee.
Cool. Anybody that's out there, do you guys have questions about any of that? Any of the value add financing? I know I get this question a lot. People are always looking for money. They're always looking for the way to get the rehabs moving, right?
Yep.
I think it's super important in this market specifically to be able to add this, in your tool belt at the end of the day, is being able to take down properties. And what's a better way than, leveraging, this money right here, to, maximize profits. So if anybody has any questions, please feel free to just drop them in the comments and, we'll go through them live.
Definitely. So here's how our process works. You're going to apply at loansforinvestors.com. In the top right, you'll see submit a deal. It's going to take about 5 minutes to do that. From there, we'll release a formal loan offer. Once you accept that offer and complete the tasks that are in the portal, we're going to order the appraisal and move the loan into underwriting. From there, that's when we ask for those 5 business days. So once your loan is ready for underwriting, and then, the loan documents are sent to your closing agent, we sign, we fund, and we close. So on the right, you can see some of the required docs that we'll need from you. In the portal, you'll see all the docs we need and the templates that we provide for the experience and for the scope of work.
We actually just got a comment really quick. Ace said, if I purchase in my LLC name, do I need to title back to personal name, or can you finance to the business?
So that's going to be finance to the business. Yep.
Okay, perfect.
So if your LLC has a parent entity, we're going to need those docs as well. Not sure if you were basing it off of that, but the loan is closed in your entity's name. We will need a personal guarantee in your individual name or from someone inside the entity that has a 25% ownership in that entity. So these are the 5 reasons a loan will get denied through us. Property's not in a state that we can finance or in a location that an appraiser would consider rural. Property value.
Can you elaborate on that? So I know you talked about 45 states you guys are in. What are the 5 states you guys are not in?
So it's going to be Alaska, Hawaii, North, South Dakota, and Wyoming. We do not lend in.
And then what would be considered rural?
That's probably the most difficult part of the process. It's really up to the appraiser. What we do is typically cities under 7,500 people, or if there's no grid work on Google Maps, or you can't use like Street View. There's a couple of things that we look at to determine if the appraiser would think, but that's really up to them.
And then do you guys hire the appraisers, or is it you guys hire the appraisers?
We do. Yep. Okay. We'll order those from our side.
Okay.
Yep. So the second thing is going to be the loan amount under $100,000 or less than 50K per unit if you're dealing with, 2 to 8 unit properties. Then again, the credit score under 680 or 660, or you've had major delinquencies over the last 2 to 4 years. And then liquidity, we require you to show at least 25,000 or not enough to cover your down payment, your closing costs, depending on which loan product. So short term, we need you to show 3 months of loan payments. Long term, we need you to show 6 months of loan payments. And then for short term, we require you to show 15% of your rehab budget.
All right, we got another question. It says, once approved for the loan, how quickly are the funds accessible?
So once we get to closing, the loan will fund the day of closing.
Okay, perfect.
Yep.
And then I had a question about number 2. So you said the property value, let's say the property, it says the purchase price. Is that, so that's just like my going in purchase price, or is that my after repair?
Yeah,
okay.
Going in purchase price.
Got it. Okay.
Yep. So, and then the fifth one, newer investors taking on like extensive rehab projects. Typically, we like to see someone who's doing, maybe they're buying a property, their rehab budget is over 25% of their purchase price. We'd like to see you do at least a few projects before that.
And is that a few projects in general? Is that a few projects with you guys, or how does the projects flow with that? Do they just need to show like track record of investments, or is that specifically with your guys' loan products?
So that's just in general.
Okay.
Yep.
Perfect. And what would they need in order to show that? Just
so that can be filled out on our experience template. It's going to be address, your name on the entity that you closed in, and then the date of your purchase. It's typically all we'll need.
Okay.
And then we'll go through public records to try to verify that. If we can't get it through public records, we're going to ask you for like a HUD or something else that proves that you've done that project. So this is the top 5 reasons people work with us. So easy application process. Like I said, about 5 minutes for new borrowers, 3 minutes for repeat, fast closings, 4 business days if you've done a deal with us before. And then we close about 90% of our loans that go into underwriting. So we're very motivated to close deals. Typically a reason a loan falls out is, due to the seller or other things that pop up. And then we cover most residential investment strategies. And then we do really pride ourselves on execution and customer experience. Our company was built by real estate investors. So we really try to tailor all our solutions for real estate investors.
Yeah, I can tell you that, I know that we've used you guys for a magnitude of different projects. And I can say the application process, I know that we preach about it all the time. It's like we've never seen an application process that's easy, fluent, quick, easy to do. That it's literally just like a plug and play almost. So I will say that your guys' software, I don't even think you're giving enough credit to what you guys have with your software development. But yeah, it's definitely something that I've never seen, in this industry. Usually it's something ridiculous. You got to submit something. You got to go through a phone call. It feels like they're digging up your whole entire life, ordeal. So I can definitely say that kudos to you guys. You guys are doing a good job with the infrastructure and software you guys have.
Yeah, thank you. So just our contact information, website, email, phone number. Feel free to email me, call me with any questions you have. Or if you have some right now, feel free to put them in the chat.
Yeah. We don't have anything there right now, but what I would like to do is, I kind of want to just pick your brain on, some common things of what you see. I know that you get probably a million questions, just like myself. I'm a coach within the real estate investment space, so I get like a bazillion questions, all the time, and I can usually narrow it down to probably my top 10 questions. So I want to kind of like pick your brain on like, what's the top things of what you commonly get questions about. And you kind of want to open up to these guys. If nobody wants to throw it in there, I'd love to just pick your brain on what you commonly you get. I know you get a ton.
Yeah. I'd say probably one of the top questions I get is about our draws process and how that works. A lot of people want to know how that works. A lot of different companies do different things. Like I said, what you'll do is you'll just email our draws team, provide a receipt of the work done. We'll have someone do a virtual walkthrough. That'll either be you or a GC that's on the project. And then from there, we'll send you your money directly to your bank account in 2 to 4 days.
Okay. We got another question. Is the DCSR an option? And can we include that in the rental portfolios?
So DSCRs are an option for portfolio loans. We can go up to 10 properties in a single portfolio. If you have more than that, we're going to have to separate it into 2 portfolios. With portfolios, you will get a little cheaper pricing, just because everything's bundled together. And then you'll save money on third-party fees as well.
Okay. What about Airbnbs? I know Airbnbs are a hot topic right now. So how do Airbnbs evaluate into the loan buying process or the loan process?
So we can do Airbnbs. We have a bridge product that's going to be a 24-month interest-only loan. We can do that and don't have to look at any of like the cash flow or anything. The rate is going to be a bridge rate, so it's going to probably be 10%, but that's going to be an interest-only loan with no prepayment penalties. So that's one option for Airbnbs. The second option is that right now we can use 90% of market rents on our 30-year long-term loan. This typically does work for people that are looking for lower leverages. It is tough when you're looking for 80 or 70% constrained to 90% of market rents. But we are working on a loan product that will allow us to use either AirDNA or other sources to allow you to use your full like cash flow amount for the property.
Yeah, I've heard of the AirDNA thing. I didn't know if you guys had anything that would flow into that.
Yeah, we're still working on it right now. Hopefully we can get it rolled out here in the next few months.
Okay, cool. Yeah, keep us up to date on that, man. That's going to be a big one. I know that.
Yeah, definitely. Trying to think of anything else here. So if you've been like a GC in your past and you have experience doing that, we may be able to count some of that experience and get you, better leverage or better rates if you're like a new borrower. That is something as well.
Okay. Can you hit one more time on the credit scores? So you said that there's a minimum for each product.
Yep.
So let's say that I'm trying to flip a house and my credit score is 640. That means I don't qualify?
Yeah, unfortunately right now, we would probably need you to bring on a partner that will have the credit score that meets those requirements.
And would it take over? So if I had a partnership, because we get this a lot, right? So let's say that I have 2 partners in the business. Is it going to be the median average of the 2? Is it going to take over one person? Or do they have to be put on title? How does that work?
So we take whoever's credit is lower, but that's whoever's guaranteeing the loan. So if there's a 2-member LLC, only one person has to guarantee the loan out of that LLC. And I just suggest the person that has the credit to guarantee the loan. So if it's a single member LLC and you don't meet the credit requirements, I do suggest finding someone setting up a new LLC and having them guarantee the loan.
Okay. Yeah, I know we see that a lot with I know that there's people with their scores are all over, they fluctuate all over the place, right? So I think that's a big value add right there. And understanding, what to do with the partnership of who's gonna be on the loan. So what else, man? I know that you get a bunch of other questions all the time. What else?
So also with the rural, we probably could finance rural properties, but it's going to be on a bridge loan, so 12-month, and we're probably going to be looking at about 65% leverage on those. So that's an option for people.
And what about land? Do you guys do anything with land?
Unfortunately, not right now.
No,
do not. So we can do new construction, but we just require you to show at least 12 new builds completed in the last 3 years.
What's the requirements on the new construction?
So 700 credit, we're going to have to do a hard pull on that. And then we require at least 50,000 in liquidity minimum. Okay. And then those loans are typically take about 2 to 4 weeks to close, I'd say, depending on the project.
Is there any maximum amount for those?
Not right now, no.
Okay.
But once you get over probably the 1.5 million mark, we probably would decrease leverage.
Okay, that makes sense.
Yep. With our DSCR loans, we do have an option for a 0-year prepayment penalty. That is just going to come with a rate adder and decrease in leverage. So we offer a 5-year prepayment, a 3-year, a 2-year, and a 1-year, and also no prepayment penalty.
Okay.
Which really depends on how long you think you're going to hold that property and, how much the property is cash flowing.
So let's say, let's throw a scenario out. Let's say I'm a newbie investor, brand new to this. I get a property. I want to keep it long term, but I need to, I need to essentially take out a little bit of a loan for the rehab portion of it. How would that process work? Would you start with one product and then refinance to a long-term rental? And then what would the process look like for all that?
Yeah, I'm happy you brought that up. So if a property does need rehab, we're going to have to first do a value add loan. Typically what we say is if you're purchasing a loan, we need it to be stabilized within 30 days of closing. If you don't think you can have that done, we're going to have to initially finance it on this value add loan. From there, once you're done with all the rehab, we'll have to do another loan. So then we'll refinance it into this long-term loan. There are seasoning periods. So if you've owned the property less than 3 months, we're going to be limited to 80% of your total cost basis. If you've owned it from 3 to 6 months, we're going to be limited to 100% of your cost basis. And then after 6 months, there's no constraint on any cost basis. And we're just going to be constrained to 75% loan to as is value.
Okay. So I know one thing in the long-term rentals, it's you're saying that it has to be a cash flowing property to refinance it out. So how does that process work? Like, what's the first step? So if I'm thinking about this, I market it, I acquire a property, I do the value add, I essentially go through and I do my rehab. Do I need to have a tenant in place prior to going to refinance it, or how does that need to work? Or how long do they need to be there in order for that to equate to the cash flow?
So we just need a lease to be signed, really, in collection of first month rent to be able to move it into a long-term loan.
Okay, so essentially just one lease and then a deposit, essentially. Okay, that's good
Correct.
to know.
Yep.
All right, then we got a question. Thanks for the good work. Please, would you explain to us the under discounted rate by the Fed for the housing market in case of the fall of the bond market? Thanks again. Can you see that comment?
Yeah, I can see it.
Okay.
I don't really have an answer for that. I can try to get you an answer from our people that deal with our capital markets. That's not typically something that I deal with on a day-to-day.
Perfect.
Yep.
What other kind of scenarios? Anybody have a scenario that they want to run by? I'm trying to think of ones. I'm trying to think of from the newbie to the tenured person. Of anything that you guys would come across. I guess we could look at it in the same exact way. I know a lot of people in really hot, I'm going to say rental areas, are looking to acquire discounted rate of properties and then refinance them into Airbnb specifically, not necessarily long-term rentals. So kind of understanding how the process you guys are flowing right now with Airbnbs, can you kind of walk through how that process would work? So we would obviously start with acquiring, locking the property up, doing the value add financing, and then what would be the step for if I wanted to make it an Airbnb?
Yeah, so unfortunately, we're still going to be constrained to 90% of market rents when refinancing into an Airbnb.
And then how would you determine the market rent? What tool would you guys use to determine the market rent? Do you guys use like the Zillow one, or how do you guys determine that?
So the appraisal, we'll get a rent addendum with the appraisal, and it'll come back with market rents.
Okay, cool.
Yep.
All right. What other questions, man? What other questions?
I think I went through everything that I could think of. Trying to think of anything else.
Okay. Cool, man. What I'll have you do is, if nobody has any other questions, if you want to pull your contact information back up on that last slide, we'll leave it up, and then what we'll do is we'll make sure that at the end of this we'll put all the information out there. Um, but yeah, man, we appreciate you hopping on today and kind of just walking through the premise of everything that you guys do. I know that you guys have been crushing it for us, so we greatly appreciate you guys coming in and just kind of showcasing what you guys got. So appreciate
Yeah.
it, man.
Yeah. Thank you for having me on, and feel free to reach out, like I said, to my email or my phone, and I can answer any questions you think of, after this.
Perfect. I appreciate it, man.
Yep.
All right, guys. So, I appreciate Ryan hopping in and, let's just call it for what it is, dropping some, good information. Whether you're an experienced investor, a new investor, these products are phenomenal. We've been using them, across the entire board for our company. And what I can tell you is that the process, we're all about making things super simple, super easy. The thought of me having to, step away, or even having, Josh and Tiffany step away for 30 minutes to get a loan approved or do anything like that, that's a lot of time. And at the end of the day, we want them producing revenue generating activities. So what I can tell you is that these guys have their software figured out to the T. We haven't worked with anybody that's more fluent than them. So I appreciate you guys hopping in today, whether you guys are watching this live, whether you guys are watching this recording. If you guys have any questions, I want you guys to feel free to reach out to me directly. We'll drop Josh, Tiffany's, myself, all of our Instagram handles inside of this. You guys can reach out. Then if you guys have any questions for Ryan directly, just reach out to him. We'll drop the links, after we post this video live. So I appreciate you guys hopping on. Thanks for watching, and we'll see you guys next time.